I think oil prices are going to stay elevated for a while. They're not going back down anytime soon. I know Trump wants to say they will. They want to say they're going to provide escorts through the Strait of Hormuz, but I don't think that's happening.
Yep.
You really have to have control of the region, shut down Iran before that oil starts to flow again through that
Plus, the
strait.
more of these bombings and the more, I mean, you're just going to have more and more collateral damage associated with war, and that's just going to embolden. I mean, Ben mentioned last night that we were going after desalinization plants, or Israel was bombing desalinization plants. I mean, you're gonna now you're, I mean, that's just dirty pool shutting off their water supply,
Yeah,
and that's just gonna piss the people off even more. That's gonna want them just continue to back the IRGC to get these assholes off our back.
right. And the other thing is, we talked about this last week, is I think, what was it, in Saudi Arabia, they hit one of their refineries. The refiners are harder to rebuild and put back online. So once you start out taking out refining capacity,
Right.
you don't have SPR for diesel and gasoline. You don't have spare refining capacity around the world. So even if things then start to ramp back up, if you don't have the refining capacity to make the products, that makes the market even tighter.
Yep.
So that's probably, the bigger issue should be watching is how much refining capacity gets taken out in this conflict. It can't be rebuilt overnight.
Yep.
Even if you've got the oil, if it can't flow through a refinery, it's useless.
Yep. What are you looking at? What do you think, Bob or Robert, Mr. Morris?
Well, you
I
know,
got the
Steve, you
bobbers
asked me,
today.
you asked me last week. You said, "Oh, should you be, writing covered calls on anything or taking some profit in that regard?" And I said no, and I'm still saying no.
Okay. Well, that was a good call for sure.
I'm not. I'm just still holding on to the upside here. Now, I had said last week when oil was, what was it, 80? I said, look, the upside is definitely skewed more to the upside than the downside. Here at $100 oil, I think in the near term, I would, at $100 oil, I'd take the over versus the under still. So I'm just
At
holding
100
on.
you get 120 print.
I mean, we're sitting at a
Start selling calls.
we're sitting at $100 here.
Yep.
The only thing that brings it down markedly is a stoppage of this conflict of some form. That's
Right. And that
here.
doesn't sound like it's
That's the
happening.
only thing that then gets companies to feel comfortable and safe enough to start driving their tankers through the Strait of Hormuz.
Yep.
So on the stocks here, I'm just holding on.
Okay. All right. What are your thoughts, Robert Marson? You've been raising cash, I know, so that's
raising
smart.
it in February and into last week, yeah. So that's as much a bottoms up call as it is top down, because there are stocks that fit my sell discipline today. Having done well or poorly, getting paid or not getting paid, I don't marry my winners or my losers. I marry them until they get expensive enough to sell, or either the good way with the P. They P their way out of the low PE or low price to sales universe, or they either way out, meaning they under earn their way into higher valuations. So that's a process that's been happening. There's been a rotation. A lot of the Russell 2000 momentum stocks have started the year really strong. People had good years the first 2-3 weeks of January with total returns with the appreciation, and that's reversed. A couple of my stocks are have come down 20-30% on no news because they overshot to the upside significantly. I have these stocks as 5-year holds, so I didn't trim all of them. If I didn't like the fundamentals, I sold 100%, which we mentioned in different different situations over the past few months. I sold all my MRAM, which was Everspin. I sold most of my TAT. I sold all of my AIP. Arteris, the semiconductor, sold 2 of my semiconductor companies totally. So not a lot to do now.
What about your oil names, Bob? I know you own the pipelines. ET was one of them. PAA was another. Do you still own those? Do you still like those?
I think he's asking you, Robert.
Yeah,
You
Robert.
said
Sorry.
Bob, so I was listening to Bob.
I know. I got the Bobberts here, so it's gonna
So
be a problem.
I'm holding them. They're acting, well. They're not going to the moon. They don't have as much price sensitivity, so small amount of their EBITDA is tied to pricing because they're mostly fee based. But they benefit
Yep.
from a rising oil tide. All the oils. Last year when oil went down, they had a terrible year last year. They went flat to down last year in a good market. So, but the
Yep.
point I want to make. The salient point I want to make on this call is if you just think about what happened last year, right? With the Trump tariff tantrum, we'll call it the T cubed event, we got a 20% drawdown on something that was totally in one man's, initiation and hence control to reverse. This situation, is much worse, right, with the real economic impact on the economy, globally, and much more risk that it spirals out of hand. Much more risk that it spirals out of hand, and if we get a tail event with this, we don't want to go there, right? So this is
Yep.
far worse than last year.